Alright folks, this is T from Simpler Trading checking in with the Sunday watch list video for the week of May 10th. So heading into the week, like we discussed yesterday, get the daily squeeze here for the S&P 500. So this is big time stuff. Of course the market is going to do what it wants to do, but with the previous daily squeeze here, squeeze ultimately fired long, there's your window of opportunity to be aggressive. So you get a good 1 to 2 weeks of upside potential. Squeeze kind of fizzles out, we get a new squeeze, things are looking good here. Stacked EMA'S, green 10x bars, bullish structure to the daily chart, bullish structure to the weekly chart. Now's the time to get focused. Of course the market doesn't have to go higher just because we have a daily squeeze, but in terms of probabilities and structures, this does point towards the potential of a good week to 2 weeks of some really good momentum. So overall market looks really good. For the tech stocks, things could be interesting, so the weekly charts are still bullish. The daily charts, things did get a little bit sloppy last week, and you got Yellen coming out. I think you get a couple, 1 or 2 closes back above the 21 here for the Qs. I'm not going to be surprised if you see them pushing right back towards the highs. So I do think you'd be a little bit patient. Just make sure we're closing back above the 21. And if we can close back above the 21, I'm a huge fan here of Google. So for tech stocks, Google's going to be my #1 pick right now, simply because of the structure. I mean, it's always going to be about the structure for me, and you got it here. Good looking daily squeeze, stacked EMA'S, green 10x bars, lighting up like a Christmas tree. In Amazon, I love that weekly squeeze in Amazon. Y'all know I do. And a couple closes back above the 21. I think Amazon could be off to the races as well. But Google will be my first pick simply because of the solid structure here. So I think you'd be a little bit patient on tech. Let's get it closed back above the 21, and then we can get to work over there. And if you look across the board, there's a couple other sectors here. Energy, I think the easy move in the energy stocks is already passed. Is the daily squeeze is fired. You're already, 2, 3 plus ATR. I think you get a pull back to the 8 or the 21. You go looking for good setups there in the energy sector. I think for the financials, a couple of y'all leaving comments yesterday. Some of you got some Bank of America, you got JP Morgan, you got Goldman Sachs. If you've already got positions in the financial stocks, I think you're in phenomenal shape here. If you're looking for entries in the financial stocks, because it is a little bit extended, and keep in mind, we're just looking in terms of probabilities here. So we're above 2 plus ATR, could easily go to 3, could easily go to 4. So if you're in financials already, I think you caught a good move here. You get a little bit of continuation, you should be in great shape. If you're looking to play, say, the Goldman Sachs, the Bank of Americas, the JP Morgans, I think you wait for a pullback to the 8 EMA or to the 21 EMA. So the financials have been rock solid, but I would wait for a dip there personally. Then check out the industrial sector here. So the industrial sector was a big reason that we got into Caterpillar last week. You had a good looking squeeze in Cat, and in the sector it belongs to, the industrials, good structure there as well. So Caterpillar, pretty quick, pretty easy trade. We sold the put credit spread early last week. We're taking profits into Friday. This was so nice, I'll hit it twice if we get the opportunity. So for a Caterpillar, I'm going to have an alert set kind of in between the 8, in between the 21. And since we already paid ourselves here in a nice easy trade, if we do get a pullback, you can kind of risk the profits you made in the previous trade, get a little bit more aggressive, then see if you can get a nice push towards 245. So good looking squeeze, you got the sector behind you, selling the credit spread, taking profits at 2.5 ATR, rinse and repeat. So I would like a pullback for Caterpillar, but then a few other things to keep an eye on here. Couple good looking squeezes. We talked about LEN in yesterday's video. I got to give credit where credit's due. So Mr. Henry Gamble from Simpler, my teammate, he brought this one to my attention last week. He brought it to the attention of everybody in the options room. You can't complain. Beautiful structure. So thank you, Henry. Beautiful daily squeeze. Get a solid uptrend. Stacked EMA'S, green 10x bars, positive histogram. This is a beauty. So for LEN, I did sell a May 21st expiration put credit spread, and I think this looks rock solid. So these are the kinds of structures where, and I always say this here on the channel, you take that kind of trade, you take that kind of setup 100 times out of 100. It doesn't mean it works each time, but you don't concern yourself with the results of an individual trade. Rather, it's a probabilistic mindset where, hey, everything is lining up here, and maybe it doesn't work this time, but if I take this kind of trade 100 times in a row, at the end of the 100 trades, I think it come out on top. So we do have a position here at LEN, a few more good-looking squeezes. I think Kohl's, the retail names have been strong. Beautiful looking daily squeeze here as well. So I am going to take consideration to selling a 60 short strike put credit spread. I think Kohl's looks good. A few of you in the comments here, you're looking at Walmart. Pretty good stuff. It's not my favorite setup in the market, but I can't blame you for having this on your watch list. Good looking move into the new squeeze. Right, everything's looking pretty solid, so I think as long as you're holding your 21, you got a good shot here, if the market supports it, of course, of getting 2 or 3 ATRs or so. Which, where does that put us? 2 ATR puts you kind of 143. If we change this to 3 average true range moves above the 21, call it a push into 144 plus. So good structure there. If you got Walmart on your focus list, I cannot blame you. So I like Walmart. I got a little bit of LEN. I want some Kohl's, KSS. I also think Big Lots. This is something that a couple of folks in the options room have been talking about. So beautiful stuff. Stacked EMAs, solid uptrend. Retail's been pretty solid as of late. You think of Target making a nice move that we caught last week. You had a good structure in Walmart. Big Lots kind of fits that bill here of a good-looking daily squeeze, positive histogram, stacked EMAs, and you're just chilling on top of the launching pad, right near the buy zone at the 21. What could get the party going here is a lower time frame squeeze under the surface firing long. So keep an eye on the 4-hour squeeze. Let's see the 2-hour chart. Yeah, there you have it, a 2-hour squeeze and a 4-hour squeeze nested right inside of a daily squeeze, right on top of the buy zone. 2-hour squeeze fires long, 4-hour squeeze fires long, all that energy getting released under the surface, that can trigger the daily squeeze. And at that point, you're looking for a push into new highs, a good 2, 3 plus ATR move. So I like Big Lots, and what I would like to do here, actually, let's see when earnings is coming up. Oh, I'm freaking sick of earnings season. So earnings on the 28th, though. What can we do here with Big Lots? Earnings on the 28th. So you only got monthly expiration here, which, that's okay. So you could do a put credit spread for the run kind of into earnings, May 21st expiration. So you're not giving yourself too much time, but I think a put credit spread with a short strike is 70. Let's go $5 wide, $2 a credit. Oh, hell yeah. Yeah, I like that a lot. So something I'm going to take consideration too. Not saying I'm going to take the trade, but that's what I'm looking for. Good looking squeeze. Let me sell that 70 short strike put credit spread. And I'm just basically placing the bet that the energy gets released and you get the 2, 3 ATR move. So with that structure there, you do have working in your favor potentially. Earnings is around the corner, so maybe you get a little bit of giddy up there into earnings, but it's a good risk reward. So if you could get filled around $2 a credit, on one contract, you're risking $300 to make $200, basically placing a bet that Big Lots starts getting back over 70 here. So a good looking structure to Big Lots. So those are a few things I'm thinking about going long. I like Kohl's. I like Big Lots. If I get a pullback in energy or finance, I can take a look over there. Got my LEN. If Caterpillar gives me a dip, I'll hit you again over there, Caterpillar. But on the other side of the things there, the short side of the game, what's really been kind of seeing big signs of distribution as of late is the communication sector. So if we pull up, is it IVM? No, give me a sec here. What's the communication sector? All right. I got it. IGV is the communication sector. So that's the iShares ETF. Let's take a look here at the structure. From a weekly perspective, you got your first close here under the 21 EMA. You also got a negative histogram. You still have stacked EMAs, and we could bounce next week, and this is a whole bunch of nothing here. However, when I'm looking to short something, the weekly chart is one of the first things I'm going to check. If you can start to pursue those short trades, just as something is losing its weekly structure, trading under the weekly 21, that's solid stuff. Typically, if you're going to really lose the weekly structure, under the mean, negative histogram, you're losing your stacked EMAs, path of least resistance tends to be towards the downside. So if you look back here at the communication sector, we closed just under the 21 last week. So could be the beginning of some downside, maybe not. But I do think that's a positive as far as, losing a little bit of your structure. And then from a daily perspective here, it's not really a good looking daily chart either, which, that's perfect if you're looking to short something. No stacked moving averages. You're under your 21, which is now sloping down. You're under your 8. You're under your 50, and you got a daily squeeze firing short here. So we did get a cute, oh so cute, little bounce here into the close on Friday. What I would be looking for is, can we get a little bit more upside? Start to push into that 21 EMA, and if we get rejected there, Then I'm looking to sell an out-the-money call credit spread above the 21 EMA, looking for a rejection at the mean for another leg towards the downside. So you could look at the ETF, and you can just say, all right, I think communication sector is a flaming piece of crap. I want to short this thing into the ground. What can we work with here? You could go to June 18th expiration, 40 days or so. Where's that 21 EMA? Right around 360, 355. So how's the risk reward on, say, a 350 by 360 strike call credit spread? $4 a credit is pretty handsome, and a pretty good risk reward. So for one contract, you're risking $600 to make $400. Pretty solid stuff. So it's the same concept of reversion to the mean. You initiate a position at the 21, you take profits at 2 to 3 ATR to the downside, and then you look to reload them to move back up to the 21 so long as you get rejected. So for IGV, you could look to short that, or you could look at a couple of names that make up the ETF here. So Adobe comes to mind. And this daily chart looks pretty good here for a little bit of downside. So the difficulty potentially of this whole discussion of trying to short things right now is that the market is just kind of balls to the wall strong. So do keep that in mind. The SPY here, beautiful daily squeeze. So sure, maybe the squeeze just keeps rallying for a week or 2 weeks and the communication sector just keeps getting sold off. It's certainly possible, but do at least take into consideration our best shorts are going to happen when the overall market is kind of losing structure. It's not quite what we got working right now. But if you are looking for short exposure, I do think the communication sector is a place to look simply based on structure, and Adobe is a decent pick here as well. Get a little flush to the 50, a little bounce back up to the 21. If we get rejected here early next week, maybe you look to sell a 500 strike call credit spread. So this ain't financial advice. I'm just throwing ideas at you. And of course, I keep you posted in the options room here on the channel if I actually do anything with these ideas. But you got Adobe there. You could take a look at HUBS, HubSpot. Daily chart is losing structure, no stacked EMA'S, squeeze with a negative histogram, little plunge under the 50, little bounce back to the 21. If you get rejected, maybe you're making another low there. So I think you could look at Hubs, and I also think you could look at Cloudflare, NET, same discussion. Breaking below the 21, you get the cute bounce back up. Not a bad place to look for a rejection and another leg lower. So there's a few things I'm looking at on the short side, but overwhelmingly this is a bullish market. Therefore, my focus mainly is going to be on playing this market to the upside. So I got my LEN. I got to put credit spread on the Qs. I got some NVIDIA, and looking for more opportunity here as long as the SPY gives us potentially a little bit of that squeeze magic. So as always, be prepared for anything, but there's a couple things to take into consideration, a couple setups you can look to play along, a couple of things you can look to play short. Comment below what you're going to focus on this week, and y'all did that yesterday in Saturday's video. Some good looking stuff. It's good to see y'all focusing on, a few of you already got LEN. Some of you are looking at Walmart. Some of you are looking at the financials. All good stuff. So I love the interaction in the chat. I appreciate you tuning in. But that's that. So enjoy the rest of your Sunday. Should be an interesting week. So I'll keep you posted here in the video uploads and on the posts. But until then, trade safe, and I'll talk to you soon.